So the FHSA is a first home saving account and it is a tax-free for the Canadian. Let's talk about the eligibility. If you want to qualify for the FHSA account, you should be 18 years or older and the Canadian permanent resident or the citizen. You should also never be a homeowner, meaning you shouldn't buy a home before you open these accounts and use this account. Let's discuss about the contributions. So the maximum contribution for the FHSA account is $40,000 for lifetime and $8,000 per year. If you contribute maximum amount per year, meaning $8,000 per year, then you will hit the maximum contribution within the 5 years, because $8,000 into 5 is $40,000 and $40,000 is the maximum contribution amount. Now let's discuss about what happens if we over contribute the amount, meaning what happens if we contribute $10,000 instead of $8,000. So the FHSA follow the same regulation like TFSA. For any of the over contributing amount need to be paid 1% to the government, meaning let's say if I contribute $10,000 on November 2023, so on November 2023 I hit the maximum contribution of $8,000 and I pay over $2,000, then I have to pay for 2 months, November and December, for the 1% rate with the $2,000. So it will be 1% into 2,000 into 2 months for the $40. This $40 need to be paid during my tax file of the 2023. So when this FHSA account will be available, there is no specific date for the FHSA account, but it will be sure that it will available after April 2023 and you will be allowed to contribute maximum amount for the 2023, which is $8,000. Okay, can both couple contribute the FHSA amount? And the answer is yes, both couple can contribute maximum of $40,000 and that $40,000 can be used while your first time home purchase is going to be total of 40,000 into 2 is equal to $80,000. What happens if you do not use the FHSA account or FHSA money? So the maximum duration for the FHSA account is 15 years or the age of the 71 years. If your account reaches to 15 years or your age reaches to 71 years, then your account will be seized. Let's say you do not use that money and you reach that limit of 15 years and 71 years of age, then you can simply transfer over that money to your RRSP or TFSA account. Or if you withdraw the money from the FHSA account, then you have to pay the taxes. Okay, so now let's understand the difference between the FHSA, TFSA and RRSP account. So let's understand difference between the FHSA and the TFSA. So for the FHSA amount or the FHSA contribution can be used like a TFSA, meaning you can use that contribution for the investment purpose and there is no tax for your investment gain. Like you can use those money for the stock investment or for the government bonds or for the mutual funds. There will be no taxes on your FHSA account for all of your investment gain. So both accounts work like the same. Now let's discuss about the similarity between the FHSA and the RRSP. So the similarity is you will get the tax return for the both of the accounts. Like whatever you make the contribution for the FHSA and RRSP, you will get the tax return during your tax file. But what is the difference between the two accounts? So for the contribution limit in FHSA is $40,000 and for the RRSP the contribution limit is the $35,000. Say if the couple want to buy a house, then the difference is the FHSA, the maximum contribution limit is $40,000. So couple can withdraw $80,000 as a first time home buyer. For the RRSP, the contribution limit is $35,000 and the couple can withdraw around $70,000 for the RRSP first time home buyer option. So for the FHSA, you do not need to put back the money, meaning you do not need to repay the money. But for the RRSP, you have to pay back the money, or you have to repay the money within the 15 years. So this is the advantage of the FHSA over the RRSP. Now the next question is, can we use both account RRSP and FHSA as a first time home buyer? And the answer is no. You cannot use the both account money at a first time home buyer option, meaning you cannot use like $70,000 from the RRSP plus $80,000 from the FHSA, and it's altogether around $150,000 for your first time home buyer option. And the answer is no. Yes, there is an option will be available. You can use either RRSP or the FHSA. Maybe government can help us as a first time home buyer to allow both of the account. I'm not sure. If there is any changes, I will keep posted here.